Hey, it's Rav. Welcome to the Everyday Investor, the hottest real estate investment show in the world. That's right, I said it. I don't care who knows it. This is going to be a great show. Make sure you get out your paper, your pen, your calculator, all that kind of good stuff. Remember, whenever you're introduced to any type of investment opportunity, always ask 4 questions to start. Number 1, what is the return on investment? Number 2, when do I get that return on investment? Number 3, what is the minimum investment amount needed? And number 4, what is the risk? Today we're going to learn how to borrow money to invest it in real estate. My good friend from Pro Funds Mortgages is here with us, Carmen Campagnaro. Carmen, thank you so much for being on the show. It's always a great pleasure to have you. We have great conversation, and I'm always nurtured when we're finished, just learning different kind of techniques and so on and so forth. Today we're going to talk to a good friend of yours, Lisa, who borrowed money and went and made a lot of money by borrowing the money. So really it was kind of a infinite return because none of the money was hers.
It was amazing.
So that's going to be exciting to have her on in just a few minutes. But before we do that, for the sake of the viewers at home, Pro Funds Mortgages, what is it? How did it get started? Tell us that whole kind of story.
Well, Pro Funds has been around for 20 years now. I started the company literally in my basement with my washer and dryer, my fold-out table, and my fax machine, and very determined to get this going. And I responded to an ad, and the person that was looking for financing had this really hard-to-finance building in Hamilton. I got him approved after much work. He was thrilled. He happened to be an investment speaker for a training company, put my name on the overhead projector.
He knows tons of people. You did a great job for him.
Yeah, so it was real estate investors from day one. So we've been financing real estate investors
for the last 20 years.
20 years, yeah.
And you know what I love about this? And you know, I don't want to get too sentimental, but I was raised by a single mom who worked very hard to support myself and my little sister. You did this all with 2 kids as a single mom, and you've built an incredible business helping many people, not just investors, but Pro Funds has helped a lot of people in the last 2 decades.
Great.
So I really commend you for that. So let's talk a little bit about this whole concept of borrowing money. I mean, you know, it's insane because when we learn from Lisa, you know, she's not borrowing this at the preferred bank rates. She's not borrowing it at 2-3%. It might be 10, 11, 12%. And so the question begs, why would somebody borrow $100,000 or so at 12%?
And somebody that, I just wanted people to see that, you know, it's not just people with horrible credit or in a bad position that borrow private money.
Savvy investors borrow money.
Savvy, smart investors borrow private money, because you can do so much with private money. If you borrow private money, you can close on a deal really quickly. You can have the negotiating power that you need because you have quick money. It's actually financing that banks won't touch. And today's the lending criteria is so stringent that to get money for construction or anything like that is very difficult.
And I want people to know that you are an investor as well. I mean, you buy properties all the time, and you borrow money all the time to be able to, again, leverage better deals for yourself because you can close quite quickly.
I have a problem with buying real estate. I have to
You have an addiction.
I have an addiction. You know, it's like, hi, my name's Carmen Campagnaro.
I love real estate.
Real Estate Anonymous. Okay, it's pretty serious, but no, I love it and I use it all the time. And it's not just for people that, like I said, have challenged situations. It's for the wise investor. You know, they can use it, get in and get out really quickly. So it works phenomenally.
And it's you know, we're not talking about no money down deals that we see on late night television. We're talking about no money down deals because we're borrowing it in a very smart and savvy way and then investing it out there.
And you know what? If it costs 12, 14, 15, 16, 18, 20%, who cares if you're going to make $200,000, $300,000? We're going to
find out what Lisa just did, so it's going to be fantastic.
Amazing.
Make sure you get your paper and pen out because we're going to go through the numbers with Lisa Weber and Carmen Campagnaro when we return. The Everyday Investor continues in just a moment. Thanks for watching. Hey, it's Rav. Welcome back to the Everyday Investor. We're talking about how to borrow money to make money investing in real estate. Carmen Campagnaro is on the show with me, as well as her good friend, Lisa Weber. Lisa, it's great to have you on the show.
Hi, Rav. Nice to meet you.
Thanks so much for being here. I'm very excited that you're on the show because we're going to talk about something that doesn't make sense to most people, Carmen.
That's right.
That we are borrowing money, paying a good 10, 11, 12% or more.
Plus fees.
Plus fees.
Yes.
This is what Lisa has done.
Yes.
To make a lot of money.
Yes.
Right? And
That's
so
right.
people are always kind of, finicky about 12%. No, why? I mean, 2, 3, 4%,
Yeah. Yeah, it baffles me. Well, a lot of people, that's how they're trained, and they say, "Oh my gosh, no, I can't pay 12% or 10% plus fees. Forget it."
Yeah.
And they let it go. They let the opportunity go. Where if you were to take that money, what could you do with it? And so, what if it costs you X? It's part of doing business.
Yeah.
Absolutely.
Right?
Yeah.
So this situation worked out perfectly.
Yeah.
Lisa, we've known each other through our children. They went to school together and
that's
things like
nice.
that.
Yeah.
She's a real estate broker.
Yeah, I can see her pin there. Yeah.
From Burlington.
Yes.
And very successful, great credit, and it's exactly what we do at ProFunds.
And
the
that
type of
doesn't-
person we cater to.
Lisa, that doesn't match. Great credit and borrowing
Yes.
money. But this is you being a
Borrowing private money.
borrowing private money.
Yes.
This is, David Bach has a book, Smart Women Finish Rich. Here's a case study of a savvy investor. So tell us a little bit about the story. So what happened?
Yeah, so we were doing full-scale renovation on our primary home
Yep.
and wanted to get it ready to go out to market to sell it.
You were going to sell it.
Sell it.
Okay, so
exact-
you have
yes.
your principal residence.
Yep.
And you could sell it as is. But
Right.
you knew that if I put some more than lipstick on it,
Right.
if I do a good reno on this, I can make some money.
Exactly, and
Okay.
and that's one thing that you as a realtor you have to tell your clients. You have to go out and first and only impression is your first impression. It's got to be good. So the house has to be ready.
Yeah.
We wanted to do it, but we have investment properties, so the conventional banks, you are only allowed to do so much within their guidelines and parameters.
Well, they lose.
Knew what Carmen
they
did,
Yeah.
and so I approached her, and basically it was a win-win because we got the money all at once. We borrowed $400,000.
You borrowed $400,000. Okay, so
$400,000.
the $400K is what you borrowed.
Correct.
And how do you like this doctor handwriting here?
Love it.
Yes.
Love it.
And
Okay, so you borrowed $400,000.
yeah, that house
I
needed
mean, we
a
can
lot of
buy
work.
a house.
Yeah.
I could buy a house. I could buy 10 houses in Windsor.
Show me where. Okay,
for-
okay,
for
Windsor. Okay,
$400,000.
not in
So-
Burlington.
So you borrowed $400,000 just
Correct.
outside the GTA,
Yes.
the Greater Toronto area.
Correct.
And what did you pay to borrow that $400,000 plus? She pays legal fees.
Yes.
To set all this up. What was the total kind of cost? What was the percentage? first of
So
all?
the percentage was 12% was the
12%?
interest rate.
12% you borrowed. So 12% on 400 would equal 48K. So that's 48K, and then a couple grand for fees.
I think it was 2% for the broker fee,
So
Broker fee.
8,000.
so 8,000.
$8,000 there for the fees.
Mm-hmm.
Okay.
The nice thing about this was with the convenience, you could pay it off.
It was fully open.
It was fully open.
You can
Yeah.
pay it off.
So-
okay. And it's not like you're borrowing this for 4 years.
No, and every conventional or private, they both have their terms.
Yeah.
So we like this, that we had the flexibility that it was going to have the money quick, get the renos done, get it on the market that's very hot,
Yeah.
not miss the market
Yeah.
because we all know what that could
Yes.
entail.
Yeah.
So we got it out and we sold it and made a great return.
So how
even after
long did
paying
you
back.
borrow this money for?
6 months.
6 months, and you paid 12% for the 6 months.
Correct.
So
12% interest for a year.
for a year.
That's an annual payment. So you really didn't pay 12%.
We didn't, no.
That's
So-
what I'm saying. So you
Yeah.
actually didn't pay. You didn't really even pay $56,000. It was
6%.
less. Yeah. But let's even just for fun,
Mm-hmm.
let's say you paid 50K because it was less because you didn't need it. But
Right.
just for fun because the return, I've heard this before we started taping,
That's
is
incredible.
insane. So you borrowed $400,000. It cost you $50,000 to borrow the 400. And so how much did you make on the sale of your home? How much more did you make on it from doing it this way as opposed to selling it as is?
200,000.
$200,000.
Yeah.
So if you would have sold it just as is,
Yeah.
you would have made $200,000 less. But because you
Correct.
borrowed money and paid 50 grand on it, you made another 100. You made $200,000.
Yep.
So this is really, in all essence, you take your $200,000 divided by, you made a 400%
Percent.
return on your money.
And Rav, it's that old adage, you have to spend money to make money. And
You have to spend money to make money,
you
but in
do.
this case, what I love about it is you didn't really spend money. your own money.
No,
I mean, and
which is even better.
yeah,
Thanks.
which is even better. So this return is infinite.
Yes.
And so this is a great strategy because I never really thought about it. You know, somebody would borrow this money and they would do another property and you'd keep your principal residence. But I think it's a great, you know, it's a great vehicle for those that want to sell their home and they know they could get more money if they did something to it.
Yes.
Yeah, absolutely.
Well, it's also, you know, her husband's he's in the construction industry,
Yes.
and it was a good all-around package for our investor as well.
Yeah, yeah.
So what we did is
Of course it's great for
we
the
got this
investor.
application.
Yeah.
I know who she was, and I know their capabilities, and you know, it was a high net worth, good income, good credit person, bankable person. This was a slam dunk. So for us, the due diligence on that was limited because we knew who she was. She didn't have to get appraisals on her houses because we knew the Burlington market.
Yeah.
We knew what the values were.
Yeah.
Our investors were very comfortable. The loan to the value of the real estate was reasonable. It was wonderful. So it was a great investment for the investor. They got out in 6 months.
Yeah.
And it was beautiful for the
Brilliant.
borrower.
Yeah.
So it was a combination. It was just harmony. It worked really well.
No, I mean, that's as a lender, like, you know, as the investor, Rav, I mean, we're both investors.
Yes.
But Rav, as the lender investor,
Yes.
would have loved to give you $400,000 to be able to make, you know, $50,000 if you needed it for the year.
Yeah.
You love to take my $400,000 if you can make, you know, only pay $50,000 on it, or less in this case, but make a profit of $200,000. I mean, that's
And we could accommodate also very quick closing. So with private money, we
Yes.
could get capital together very quickly and
Yeah.
fund within a week.
yeah.
So if you're negotiating an offer, and let's say there's multiple offers on the
which
table.
we live in those times right now. So
Yes.
that's a common thing that, you know, when you're sitting down with a client and a buyer and you say, are you pre-approved? Do you have a letter? And with the guidelines, you said getting that much stricter and stringent, tighter, they need another offering.
Yeah.
Or they're not even going to be able to play in the game.
So private money can be treated as cash.
Yeah.
You know, so if you know that you can get, because you know, as long as we know what the value is and that you're pre-approved in a way with our company, we can
Yeah.
fund very quickly. So
Yeah.
you can go in on a cash offer.
So in this particular instance, the property as is was worth what?
640.
640,
Yeah.
and because we did this, you know,
Yeah.
we
We got just under 1.2.
yeah. So 640, and then how much did you owe the bank on that in terms of mortgage? I mean, usually you keep a big one on the principal, no sense paying it all
Yeah,
off. but
4 and change.
4 and change. So,
At the time.
so why I'm asking that is, I know there's a couple $100,000 of equity in there.
We also had another piece of her real estate
Of
that
course.
Yes,
we
we-
secured both
yes.
properties.
Yeah, so Rav, again, if I was lending this to you, I have collateral of the one here, there's a couple
Correct.
$100,000, plus your other investment property or properties. And so again, I'm looking at it from a lender standpoint, it's great. From a borrow standpoint, that's the topic of this show, you know, it's great. So now that you feel comfortable with this, are you going to continue to borrow money to do other, obviously not your principal residence, you just moved into a new one, but are you going to do this for other investment properties?
Absolutely.
Yeah.
And like Carmen, I'm interested in being on the other side as well as
Lending
an
as
investor.
well.
Yeah,
Absolutely.
she's actually
Yeah.
gonna
So it's
be
been a great
participating on the other side.
all-around experience that going into it, didn't know that much. Now why wouldn't you?
Well, listen, I love this country. I'm born in this country, Kingston, Ontario. I love our banking system. I think it's what
Absolutely.
keeps us safe. But listen, they also don't want you to know. They don't want Rav to know that I can be the bank and lend money out as well,
Sure.
right?
You
They
got to
don't-
think out of the box here.
Absolutely, because you know then they lose money, and so we have to be able to do that. And I think, Carmen, that's your skill set for people to be creative, and that's
Yeah.
why you have
Absolutely.
you know,
So if
success.
someone does bring an opportunity, we are happy to take a look at it, go through the whole deal, see how it would work, and put together the best financing model.
Yeah.
You know, so if you're looking at buying, let's say, a building that's vacant, that has huge upside, you can get private money for that. If you, for example, you bought a house and it needs renovations, we can actually get you private money to close on the deal
Yeah.
and give you the second part as a construction loan.
Yeah.
And what we'll do is we'll lend against the value when it's completed.
when it's completed.
So
okay.
we'll get an
The
appraisal
completed
today.
value, yeah.
So today, and
Yeah.
then when it is completed, and then what we do is we'll hold back the funds and we'll release the money as the construction is completed.
Yeah. And in this case, you know, Lisa sold the property. She knew she was going to do that, but she didn't necessarily have to do that. She could have refinanced and paid back, you know, the
Absolutely.
person. I mean,
Well,
maybe we wouldn't
that's a
have-
large amount of our clients do that.
Yeah.
Right? So they do their reno, or and they go back and refinance with the bank.
Refinance with a bank, give that lender all their money
And then
back.
guess what? All their money that they put into this comes back to them. So essentially, now they're in with nothing on this investment property, and then it just cash flows.
And what's really cool is not just you, but a lot of your, up to 40 people, at ProFunds, a lot of your staff, I know Andrew and different people there that do the exact same thing. So
we have a team.
It's always nice for me when I'm doing something that, who I'm working with, they're doing the same thing as well. You're not just teaching this, you and your staff actually do this on your own projects as well.
Oh, absolutely.
Yeah.
We live it every day. I love it.
So Lisa, what's next? What are we thinking about? We're just looking at a few different opportunities.
Bigger house that needs more work.
Yeah, and that's it, right? I mean, and again, I commend you guys because you do find as investors, you're looking for the ugliest house in a nice kind of area, and
also
that's a gold mine.
Solutions. So, I work with construction investors, new first-time home buyers. They have another solution.
Yeah.
If they don't fit the mold with the conventional bank, it's a nice thing that they can discuss and see if that works for them going forward.
Yeah. Well, listen, guys, that sounds fantastic. We're going to take a break here, then Carmen, we'll come back with some closing thoughts. You're watching The Everyday Investor. We just heard how Lisa made a lot of money investing in real estate, boring money to invest in real estate. Don't go anywhere. We'll come back with Carmen Campagnaro's final thoughts. Thanks for watching. Hey, it's Rav. Welcome back to The Everyday Investor. We've been learning how to make money by borrowing money. It's been a fantastic show. Carmen, thanks for being on the show.
Well, thanks for having me. I love this. It's great.
Yeah, and Lisa's stories was amazing. What would be, one or two things that you would leave the viewers with, into this whole world of investing in real estate, borrowing money, all that kind of good stuff?
Well, I think thinking outside of the box is really important. And a lot of investors are crippled with fear in doing something, maybe just to let that go and try it out and not worry so much about the cost of that money.
Yeah.
I think that's the biggest hurdle for people. They say, oh my gosh, I can't pay that 12, 14%, $50,000, $60,000, whatever it is. But if you look at the big picture and see what you can make out of it, I think that's how people have to look at it.
That's not chump change. She borrowed $50,000. I mean, she paid in interest $50,000. I mean, it was less because it didn't quite take the year. But she paid, let's just say $50,000, but she made $200,000 profit.
Yeah, she did.
Yeah.
And I mean, not every deal is as juicy as that one was.
Yeah.
Right. Some of them are a little leaner.
Yeah.
And I also want to mention that if somebody does need, let's say, financing for a down payment and construction, and they have additional real estate that we can secure, they can actually get up to 100% plus on financing. So if you have other real estate and you've exhausted all your liquid cash at this point, you can easily use the other real estate and with that equity as security and come in and do another deal. So you're not.
That's a great point. So if I've got 4 properties and there's lots of equity in them, I could do a 5th and I don't have to have any money because the lender is going to see those properties and that's collateral for them if anything were to happen.
Exactly. So you can use those properties as a tool to keep buying more.
Yeah.
And you keep rolling it. And a lot of our investors do that. I do it.
Yeah.
It's
you do
brilliant.
it all the time.
Yeah, I love it.
Yeah. And I think the other thing that you always say to me, and I think it's for the viewers to understand this, that with a little bit of education, this is quite simple. There's nothing complex with this. I mean, it's not like we are, Harvard real estate grads or anything like that.
No.
And I barely finished grade 12. But once you understand the concept, it's quite simple.
And it's all about relationships and your contacts in the industry.
Yeah.
So, it's a very small world in this industry. And with real estate agents, they want to know you're a closer if you're buying real estate.
Yeah.
Right? So if you have your contacts lined up with your financing team, which is one of the key parts of the whole business, that's your buying power.
Yeah.
So if you have a good relationship there and there's loyalty and honesty, so you're disclosing everything up front so that we can work with the facts, we can help out many different situations.
Yeah.
And it won't be that tough. So
I've heard it said that your network is your net worth.
Absolutely.
Right? And you have a big team with you. I borrow from that team. I've talked to your lawyers and your in-house, because ProFunds, I mean, it's a big operation. You have in-house counsel and people that vet all your deals and third parties.
Yeah,
and
we have a good team.
we're perhaps in the near future, we're going to do a show on real estate investment trusts. You've been looking at doing REITs and, all that kind of.
There's a lot of exciting things happening. And, but it is all built with the team in our company. Everybody has a good level of expertise.
Yeah.
And they're all trained in our model in the way that we operate.
Yeah.
So there's a certain corporate feel with what we do and how we treat our clients, whether they're borrowers or lenders.
Yeah.
So it works out really
and
well.
Yet you're just so down to earth, at the same time. The corporate feel, but somebody like Carmen, who and your staff really, who's just really down to earth. Carmen, thank you so much for being on the show.
Yeah.
Learned tons, and it was very, very inspiring. And thank you, viewers at home, for watching this show. To learn more about how you can become an everyday investor just like Lisa, follow us on social media, including Facebook, Instagram, Twitter. Connect with us on our website, www.theeverydayinvestor.tv. And on behalf of myself, Rav Tour, we'll see you next week, same place, same time. Honey, I love you. I'll be home soon. Bye, everyone.